Market's absolutely flat, but off the lows by a significant margin. By the way, I just also like to point out that declines are now outnumbering advances. So 1,058 stocks are lower, 980 stocks are higher. The difference is not that large, but even at 1:1 for a market which had come up so much from the lows, it was pretty stark. Rahul Arora is CEO with Nirmal Bang Institutional Equities. He's with us right now on the show. Rahul, thanks very much. We usually dive straight into stocks and discuss a couple of ideas, but just wanted your sense and the feedback that you are getting in your conversations with buy-side clients, etc., about the state of the market right now, Rahul. Where are we at?
It's a very interesting dichotomy, Prashant, because we just hosted a conference on Thursday and Friday of last week, so got a chance to interact firsthand with quite a few fund managers. No one's complaining about the levels of the market as long as it keeps rising, but yeah, definitely valuations are becoming a fairly stringent concern. I think, Prashant, you need to put into context the earnings season. I think for a lot of people, when they say earnings have been good, calendar year 2017 was a year of demonetization and GST. So calendar year 2018 does have a fairly significant tailwind. I think the real call to take is what FY20's earnings will be on a normalized year of FY19. And I think that's a call that people are struggling to take right now. But even on the estimates that are projected out there and what we have in our coverage universe, I think at 11,500, we're definitely about 10% higher than where we should be is our own assessment. Not to suggest that where the market should correct about 10% and reverse to mean because of the earnings projections, because the flows are still strong. But, the handful of stocks, the 10, 15 odd stocks that have taken the market to these new highs, there is definitely a case to profit book in them. That being said, if it's at the end of the day, it's a demand and supply situation. So if the SIP flows keep coming in and the fund managers keep chasing these names, they may go higher. But I would not be too confident putting in money into these 10, 15 stocks that have gone up, that have taken the Nifty up in the last 1,000 points or so. So in summary, I think I'm fairly concerned about the valuations. I don't know how much you can get in terms of an incremental return from here till the end of the year.
Okay, but what about stocks which have which are still to recover on, say, a year-to-date basis, even within the Nifty? There are many stocks, something like a Tata Motors, which is still down around 40% year-to-date. There is Vedanta, which is down 36%. Are you looking at any of those?
So I think, Ekta, if you're looking at stocks that have been, for one reason or another, battered down, I think my top idea there would be Ashok Leyland. I think we're pretty clear that it's a buy at this point in time, and it could give you a very steady 15 to 20% compounded return over the next 2 to 3 years. I think we haven't tinkered too much with our volume assumptions, although we did take them down, after the recent regulations that came through. But that is definitely one stock where we're, assuming about a 10 to 14% kind of volume growth over the next 2 years. Very strong return ratios. Debt has come down quite substantially. A very strong pipeline in the non-automotive sector in terms of defense and spare parts. So that is one stock that we would go in and buy straight out. The other one, I think, we've discussed this name in the past, but just seeing the way Sun Pharma has behaved of late, and we are getting into the back end of the year. If things start moving well for Dr. Reddy's in terms of their Duvada plant, Srikakulam, and a few other couple of option values that you have there, it could be another name in the large cap space where we think, there's been a fair amount of price erosion, but valuations are of comfort. I think if you look beyond the index, the multiplex sector looks really good. I think the news flow has been fairly dramatic in that space over the last few weeks. But I think the prices have corrected to fairly attractive levels. So I think a couple of these names in the larger caps and a couple of these names in the mid caps where there has been news flow related price erosion, I think they could be fairly good attractive entry points even at this point.
Rahul, we leave it there. A short conversation today, but appreciate your time here on the channel as always. Rahul Arora, CEO, Nirmal Bang Institutional Equities. All right, so we've got markets which are down about 4.5, 5 points. 11,430 odd is where we are at this point in time. Mid-cap index in the green. Basically, there is a bit of a leg down which is starting to appear.